from about 2005 or whenever they started. So last year,
How'd they do that?
they must have been going out of business.
Well, that's television now. Doesn't do anybody.
I don't know if they increased it, but they didn't increase it in proportion to what
They should have
it
done it.
should have been.
Yeah, it's tough because we do a lot of condos and you pay for what you get too.
Right. Right.
They were cutting the grass too short and it was browning out.
Oh.
And we've got the same landscaping people now and they cut it longer and it's been staying green and the residents are happy.
Yeah, but it was 3 times as much money.
Nice, right?
Yeah,
They gave it to me with the house.
But they pay their staff so that the staff is.
you should. That's, you have to,
Doing
I don't, yeah, like I think businesses nowadays, it's because they don't pay their people. I see it because I have a lot of clients at different businesses. The good ones are fine. They don't have a hiring
Mhm.
Yeah.
Oh, okay.
And
because they pay their people and they pay. You gotta be able to make a living,
yeah.
Especially like snow removal, there's not steady income. Yeah, depending on the weather, at least landscaping can play.
Yeah.
But the snow removal, it's hard to get.
When you guys do your snow, do you do yearly or do you?
Yeah, we do it, 5 months, snow season.
Right, but you pay for the season. You don't
Yes.
pay for-
Regardless, and then what is that, if it's over 50, Michigan seasonal, like our average is somewhere like 48 inches. So we're good for up to 50 inches, and if it goes over, I'll pay for additional.
Oh, that's a good way to do it.
Something like
Ready?
that. Yep.
Yeah,
Yep,
really.
let's go ahead
All
and,
right.
get started here real quick. I'll do a quick introduction. I mean, most of you guys know me already, but I'm the Chief Operating Officer here. With me is Natalie, our Marketing Manager. And then our presenter tonight is Marris from
Marris Brown Insurance. Yeah, go ahead.
So we have everyone here, and then we have several people joining virtually as well. So I'll kind of monitor that and see if anyone pops any questions in on chat, or if anyone has a question virtually and wants to ask it, just raise your hand and let me know. And then we will turn it over to.
This is,
While they're looking at that, we do have this little booklet here, which is really nice. I know you, I had spoke about the giveaway that we have going on. There is a QR code in the middle there underneath our expo. If you scan that, it'll take you to our Facebook page and you can enter the giveaway if you would like. And there's also some just really great information about KS in general in here, so you can take those with you. Also, one of the magazines, if you wanted to grab one of those, it's a great resource. It has a lot of wonderful articles. Somebody from Marris's team wrote an article in there, and it's on page 40. So if you want to pick up a magazine, if you're with us virtually, you can come by the office or leave a comment in the chat, and we can send it on to you. There's actually some really great articles in here about association living, but just about, homeownership in general. Some really nice articles related to for board members and for association members, right? Let's see that.
I think I was reading this page earlier.
There you
That was when
go.
I was skimming through.
Decoding risk assessment. That's the one that we were looking at. Mhm. Good.
Okay. Yeah.
All right.
So
Thank you.
All right, so we're gonna go over insurance today. Super fun topic, right? It'll be very interactive. If you have questions when we're on a topic or, you want to, please feel free to ask at that time. I think we're gonna take questions at the end as well, but for the people online, will they just type in the question to you?
Yep,
What do you
yeah,
think?
either just type in your question or unmute yourself, either way.
Okay, perfect.
Is there a camera here?
Yes,
Which way is it pointing?
it's 360, so it goes all the way around.
Okay.
Is the voice activated?
Yes, it is. So as you speak, it follows you and the camera will go around. So, yeah, it is interesting. When we're done, we'll turn that back on and you can kind of see how we're.
All right, so we're gonna start out, we're gonna go over different things, related to insurance and with associations. So liability, property, umbrella, directors and officers, and fidelity bonds. So let's start with property. So, most of the people here are board members, right? So you look at the insurance for your association along with your management company. So just kind of understanding insurance, this is kind of insurance 101, just so you understand some of the real major things that you kind of need to know when, if you're, shopping your insurance, or the associate, maybe a co-owner may have questions and so on and so forth. I would always refer them to the manager or to us to answer those questions, but this will just give you some basic knowledge. So the first thing is, as it relates to how does a condominium association's property, how is that covered? So the association, the way that the buildings are valued, so you have a replacement cost number. So with an association, the insurance company will go in and they will value what the replacement cost, or estimate what the replacement cost will be for all the buildings. So they take that number and then they put it, you've got that large number, right? So what you want to make sure is that your insurance policy either has blanket coverage or guaranteed replacement. Guaranteed replacement is not as common. It's starting to not be offered as much by a lot of insurance companies. There still are some that do offer it. And then there's blanket coverage, which a lot of carriers offer that. The majority of them offer the blanket coverage. What blanket coverage means is that, let's say you have a 10-building condo association, and each building is worth $1 million, right? Or the replacement cost is $1 million. So when you add that up, it's $10 million. What blanket coverage is that for any one loss that you have the full $10 million for that loss. So even if one building were to be completely destroyed and the replacement cost number on it was $1 million, right? When you have blanket coverage, it takes that whole amount and blankets it over. So any one loss you have the full amount of the policy. It ensures that you never have, what if it costs 1.2 million to rebuild that building, right? Well, that building was originally a replacement cost at $1 million, but because you have blanket, you're not going to have to pay out of pocket or anything like that, and you have the appropriate coverage. Guaranteed replacement is what it is, guaranteed replacement. There's normally a cap though to the guaranteed. A lot of times it'll be like 150% of that replacement number. Depends on the carrier again, but with either of them, you're good. And then you want to make sure, and again, I don't really see it in the industry. I mean, we handle over, I think, about 700 associations and their insurance. None of them are not on 100% replacement costs. You don't want a policy that has any kind of co-insurance, meaning where you have to pay a portion of the loss or anything like that. Okay. So some of the things within property coverage that are important that you need to make sure that the association has. Now, I'm comfortable with the ones that I insure because I know that it has these things. But again, when you're reviewing your insurance, or, as a board, you have somebody come present, your different insurance quotes, you want to make sure that in the property you have ordinance and law coverage. So what is ordinance and law? So there's 3 sections to it. There's coverage A, coverage B, and coverage C. Coverage A is extremely important. If you notice, it says loss to undamaged portion of the building. So what that means is that you can have ordinances that say if a building is damaged or in a fire or something, normally it would be fire, and let's say 55% of the building was damaged. There are ordinances that say we are not going to allow you to depending on the year and all this other stuff, the city can come in and say, we have an ordinance that says once a building is damaged beyond a certain percentage, you can't try to tie that into this old building. You have to tear down the rest of the building and build a brand new one insurance without ordinance and law coverage wouldn't cover that. Because remember, insurance is to make you whole again, right? Well, if that 45% that's left, that wasn't damaged. That wasn't supposed to be torn down. But because of an ordinance, you have to. So you have to make sure that you have ordinance and law, and coverage A covers that. And it's normally the limit of what so if that association was insured for $10 million, you would have $10 million of coverage A. So you'd have plenty of coverage then if you ever had to do that. Coverage B is increased demolition cost. So that other 45% that was left over, you now have to tear it down. There's going to be increased demolition costs to it. Again, you want to make sure you have coverage B. You obviously don't need as much coverage for that because it's a smaller type of loss. And then coverage C is increased cost of construction. What that would be for is normally code things, right? So you may have a building that had a fire and it's getting rebuilt, and now the firewalls have to go up all the way through the ceiling, and that wasn't how it was built before. So again, remember the definition of insurance: to make you whole again. It's not to make in addition. Well, this would be in addition. So you need to make sure again that you have the ordinance and law coverage to make sure that it provides coverage for any type of code updates or things like that. Again, you don't need, you'll see on policies, maybe $250,000 worth of coverage, this, 500,000, somewhere in that number. So as it relates to property, those ordinance and laws, you can see it's very important to have, because you could have a loss that could be very large, where if you don't have that coverage, you're going to have a really big problem rebuilding your building.
Well, and a good example of that is, like, I know none of you are from a high rise, but if there's a high rise building that maybe didn't require fire suppression when it was built, but the building burns down and now it does require fire suppression.
We've had that happen recently where, in the last few years, where we've had a fire and now the codes in that township require condos to have, sprinklers. Well, that's an increased cost of construction. So you're going to need that coverage. Okay. Water backup. So water backup is for sub pumps and sewers. The association a lot of times does not have responsibility as it relates to finished basements. Like if someone has finished basement, normally, I know of a couple, but for the most part, that's the responsibility of the owner, because it's a betterment and improvement, right? So if you've done any type of betterments and improvements in your basement and you finished it, or if you have personal items down there, any loss you have is going to fall under that co-owner, their HO6 policy that they have personally. But in some cases, the association can have responsibility as it relates to cleanup. Now, your bylaws will dictate that, but unfortunately, what I've seen over the years, bylaws don't address water backup very well. In fact, sometimes they don't address it at all, right? Right? So then it becomes a lot of times, is the association responsible for, and a lot of times if the association is responsible for the sub pump, let's say, like they're responsible for it, not the co-owner. The association is responsible for maintaining it, replacing it, things like that. The association, again, based off bylaws and different things, could have responsibility if there was a loss to mitigate, to clean it up. They won't replace the finished basement. It doesn't matter. And again, it doesn't matter whose fault it is. It doesn't matter, why. If it came up through the sewer or a sub pump, that's what that water backup is for. It is not for things like a broken pipe or, a broken toilet. That is just a normal claim. It's not a specific, what they call water backup. And why we talk about water backup, and it especially is important with your co-owners, a lot of co-owners don't know that they need to carry water backup for their unit. So we always think it's a really good idea that you really make sure you communicate that appropriately to the co-owners. Like you're responsible for your basement. You're responsible for the things that happen down there. So make sure you carry water backup on your HO6 because it's a coverage that you have to add. It doesn't just come normally. You might get a small amount of coverage automatically, but if you have a finished basement that costs $40,000, you need to make sure that you have that coverage as a co-owner. But the association can have some responsibility as it relates to water matter. Okay, so we talked about that. Insurance responsibilities versus the co-owner. You know, as boards, you always want to make sure you update your bylaws and make sure that they are updated, especially in the insurance portion, especially where it talks about responsibilities of the more clear you can be in those bylaws, because the bylaws are what decide who's responsible for what. So again, just look at your bylaws, make sure they are updated, make sure they have the appropriate things in there, and that they're working in conjunction with the way that you want to make sure that you're educating or informing your co-owners so that they can go get their proper insurance. Because I ask this question all the time when we do these classes. How many of you took your bylaws in when you got your HO6 policy? Nobody ever does. So we'll have a room of 100 people and one person will raise their hand.
Yeah.
And it was a former insurance dude,
Right.
right? So that's my point. How could you possibly be insured right if you might be, luckily, but you also might be grossly underinsured, or I've seen even grossly overinsured in areas that you don't need that much coverage. So I think it's important to educate your co-owners. And, you know, there's a lot of different ways to do it. And I know KS does a great job working with their associations on communication and things like that. But putting the insurance portion of the bylaws in the communication tool on a consistent basis, because you gotta remember, you have people moving in, moving out, moving in, moving out. To do that, so they know to take that with them when they go get their insurance policy. Because how many units are in your association?
I think 104.
Okay. So 104 people have insurance there that truly never took, because I guarantee you're not the only, right? There was probably 102 did not take their bylaws with, and that's shame on the insurance, but not all insurance agencies, really very few specialize in condos, right? I mean, we ask for bylaws, but that's because that's what we do. You know, we specialize in that. You all have agents, I'm sure that, but they never asked you for your bylaws. They just gave you an HO6 policy. Based on what? Right. So that's where you have to be very conscious and let your co-owners know, like, hey, now if they just, you know, here's the insurance portion of the bylaws here. It's just a 2 pages. It's not a lot normally a lot. Now you've done everything you can as a board. If they still don't want to take that into their agent, now, you know, that's on them. But you as a board and management company, you've done everything you can, because when we have property claims, the vast majority of the issues we have is because co-owners were insured improperly. That's where you start to we have a lot of issues where people don't have the right coverage. So one thing that we tell you to do is if we insure you, we come out and do a presentation at your annual meeting about HO6 policies. If you've got a different agent, ask them to come out and speak to your association at an annual meeting. Some of you probably get better turnout than others. I understand that. But it's a really good thing to do because it makes everybody aware of what they need on their insurance. Okay, so liability now. So liability is for slip and falls, things of that nature, where the association, you know, could be sued for liability reasons. So underlying policy limits.
Are we talking about the homeowner or the association?
The association, right? Yep. So the association can be brought into a lawsuit. Slip and fall is kind of the most common. The law now has changed in Michigan. It used to be where it was open and obvious. There was, you know, now that law is not as, I don't want to get into the details of it, but it's
That's a whole seminar.
that's a whole seminar in itself. But it's going to cause more, probably, I talked to actually the head of the claims today of Farm Bureau, and he was saying it's gonna increase the cost of liability a lot because now it's not just cut and dry. You have to go to a jury trial and all this other stuff, which increases the cost, obviously, for the insurance company because they're having to fight all of these claims. But the underlying policy limits normally is about $1 million. You'll normally see it's like 1 million, 2 million. What that is, it's $1 million per occurrence. Okay? And the 2 million is how much it will, the aggregate. It's how much it will pay within a policy term. So it'll pay $1 million per occurrence, but it won't pay more than 2 million for the policy year. So you could have $1 million claim, pay. $1 million claim, pay. You have another claim within that year, there would be no more coverage. Unless you carry and you have an umbrella policy. So we always recommend umbrella policies. What an umbrella policy is it's in addition to the liability you have. So you have $1 million on your policy, and then you buy an umbrella. You can buy them personally. Some of you may have a personal umbrella. I have a personal umbrella policy. It sits over that $1 million that you have. Some associations have $1 million. Some associations have 15 million umbrellas. It really just depends on you as an association and what kind of liability issues you may have within you. So if you have pools and ponds and tennis courts and all these other, if you rent out your clubhouse, all of those things start to add onto the liability exposure you have. So I have an association that has 600 units, ponds, pool, clubhouse, basketball courts, tennis, like all of it. Well, they carry, and they have a lot, 600 units almost. That's an enormous, they've got a lot of revenue. They carry a $15 million umbrella because they don't want, and again, umbrellas are not that costly in relation to the amount of coverage you get. $1 million umbrella for a small association, less than 60 units might be, $1,500 a year. It's really inexpensive for what you're getting. So just be aware of that. Again, every association is going to be different. A 30 unit, I have a 30 unit association that has really nothing. They don't have a pool, they don't have a pond, they don't have anything. They might only want $1 million umbrella because they don't have as much exposure. But again, that's a choice that the board makes on how much coverage they want. But just so you know, umbrellas are normally very inexpensive for what the coverage you get. Management companies are additional insured, like on the Farm Bureau, we write our condos through Farm Bureau insurance. The management company is always automatically an additional insured. When to notify your agent or the insurance company of a claim? Immediately. So if you ever have any kind of incident happen, or you get any kind of documents from someone, even requesting, like they request to have certain things done and they're not getting done, so they start writing letters and things like that to the board or the management company, you want to put the insurance company on notice of that, because that is starting the incident basically. And some insurance companies, especially like on your D&O policies, have limits of how long, like if you knew about something and you never notified because you're like, oh, it's no big deal, it'll, we'll take care of this, or, this person's gonna go away. Don't do that. You need to identify, let the insurance company or the agent or management company, which will in turn let us know of any type of incident, because if too much time goes by and then something happens where there's a claim, they could deny the claim because you waited too long to let them know about what was going on. So anything that happens, any documents you ever, obviously if you ever get anything from an attorney, even if it's not like a lawsuit, any type of letter or anything like that, you need to let your management company know immediately.
Speaking of additional insurance.
Yeah.
Does KNS, name our associations as additional insurance?
I don't, on what? On their insurance policies?
Under liability policy.
I don't know on it. They would add you, no, because,
Why not?
why would KS add you?
There's additional insurance?
Yeah,
It just says precaution.
well, you got your insurance,
I
okay,
understand.
yeah, and KS is not going to add everybody that they do business with, because they're providing a service for you.
I understand.
Yeah, they wouldn't add you as an additional insured.
Okay,
You would be added as or KS is an additional insured on the association's policy.
that's my point.
Yeah, but it's not,
And that's like a good case with that is if there's a slip and fall, I'll take that example.
Yep.
A lot of times if that happens, they're just gonna name everyone and their brother in a lawsuit. The
True.
management company,
True.
the snow removal company, the association,
Right.
so that's where that comes in.
Well, hopefully we've got all those other contractors naming us as additional insured.
Right.
Hopefully.
What covers us as board members?
so we'll get to that. That's the DNO coverage. So we'll get to that here in a second. So the liability coverage is kind of an additional is, in addition to liability, associations also will carry workers' comp. Now, people will say, well, why do I need to carry workers' comp? Because we don't have employees. A lot of associations don't have what you would call employees, right? Now, if they have an employee, then definitely they need to carry workers' comp because it's the law that you carry workers' comp if you have employees. But associations are unique because they're not, a lot of the associations don't have employees, but you're hiring people to do work, contractors, the management companies, but you're the one that they're actually doing the work for. So an association will carry workers' comp in the event that they were to hire someone some sort of contractor, let's say landscaper. And let's say that landscaper, their workers' comp expired or they didn't pay their bill or whatever it is, and somebody gets hurt. There's case law where they can come back after you as the association because you're the one, and I don't agree with it. I don't really understand because an association is hiring them to do a service, but because you're a company and you're required to carry workers' comp if you are hiring people to do work and services for you, because if that particular contractor workers' comp was, like I said, canceled or, they didn't pay their bill and someone gets hurt, they could sue the association. So that's why you carry workers' comp. Now, you also carry it for volunteers and board members. So the policy that we write is specifically for condominium associations, the work comp, and it's a no payroll, no audit. You don't have to do an audit, which an audit on work comp is basically like, give me all your information and all your certificates to show me that all the people you hired had insurance, basically is what it is. Because if they didn't, then they're going to charge you because somebody's paying for the workers' comp. And so the non-audit allows the management company not to have to go through and do it's an enormous amount of work to audit all the associations. And it's only I think it's like $575 a year, this policy. And like I said, it also protects volunteers. Maybe not in this room, but we know many associations that have volunteers out there doing things. So if they got hurt, it would cover them. And it also would cover board members, saying that you were doing something for the association and got hurt. Again, it would protect the board. Liability and COLRs, doing work around the community, again, there is liability with that, just so you know, when you have people out doing things, if something were to happen, the association can be held liable for any, if somebody got hurt or fell off a ladder or something like that. So we're not a big proponent of it. I don't really recommend it, but I get it happens. But it's something that you need to be aware of as a board, that it can create liability issues.
We literally have someone that we've asked her not to do things, but she insists on.
Well, you can't, if they want to do it,
Yeah, right, yeah. So,
But,
but no, that's something, I'm glad you addressed that, because we discussed that at our meetings.
yeah, I get you're probably saving money and all, but in the long run, it's maybe not the best.
And always do an unaudited policy. Your management company will love you for that.
Yeah, not
Oh,
audited.
yeah.
And here's the other thing, audited policies, you can get through the state of Michigan, a audited work comp. The problem with it though, is it does not cover board members and it doesn't cover volunteers, because they don't consider that an employee. That policy will only cover you if you are what you would be considered. You're getting paid. I don't think you guys get paid, all right?
Paychecks.
I knew the answer to that. Yeah. I actually think you should get your dues at least for free or something. Come
We'll
on.
bring it to the.
Yes, hold on.
I'll do a poll on Facebook and see.
You should. You should. I'd love to know what they did. Yeah. All right, directors and officers. So we're gonna get to this. So what does DNO cover? So DNO is, your question is, what do we have? I'm sorry, your name, Miss?
Kathy.
Kathy, this is for protecting the board. You gotta make sure you have a good directors and officers policy if you're gonna serve on a board or a condo association. Because I don't know if you know this now, time to time they get sued. So.
No, I didn't.
We
Yeah.
get a lot of threats. We get a lot.
Yeah, I'm sure you do. Well, we kind of highlighted some of the things that you want to make sure your DNO policy covers. We write our DNO policy through Travelers Insurance. I think about 99% of them. The ones that aren't is because Travelers won't take them, basically. Travelers has a standalone directors and officers policy. We think it's one of the best in the industry, and it's got these coverages on it already. Again, these are just good questions that you can ask your insurance person if you're sitting with them, or you're in, like I said, you're in a meeting trying to decide which insurance company you want to go to. You want to make sure that it includes full prior acts. What does that mean? It means, let's say I insure you today, and we insure you for about a week, and all of a sudden we get a letter from an attorney that says, we're going to sue you for something that happened 2 years ago, or whatever the statute of limit, let's say it's a year. Well, they insure you now. They didn't insure you back then, right? But if you have a prior acts coverage, it'll go back, and as long as you're insured at the time the claim, it's what they call a claims made policy. That's the type of policy we have, meaning when was the claim made? So if the claim is made while you're insured with this carrier, even if it happened before, they will cover it, if it's a covered claim. You want to have coverage for, if you notice down there, insure about the past, future board members and spouses of the board. That actually, let's say you come home, you're on the board, you talk to your spouse about something. This is something that, these have happened. The spouse then goes and talks to somebody else in the associate. Oh, I can't believe that person just so happens to be best friends with the person you're talking about or whatever. They can sue you for libel, slander, things like that, the board. Well, your spouse is the one that did it. So you need to make sure you have, and again, all of these things are here. Why do you think these coverages are here? Yeah. Yeah. Because they happen. And so you want to make sure that you have coverage for things that are not related to, like just like money. A lot of people think D&O claims are just money based. You know, what's the association do with money? There's defamation, there's wrongful eviction, there's, I mean, I could, you know, discrimination. I could go on and on and on of the claims that are not related to money. Now, I never understood it because when somebody sues a board or an association, they are really suing themselves in essence because they are part of that association. You know, if you have 100 units, they're 1/100th of that association. But it happens all the time. So these are just some of the things, I don't have to read each one to you, but you just want to make sure that your policy has, and normally the limits it's $1 million. Again, you can, $1 million limit. We write it with $1 million limit and $1 million of defense cost outside the limits. That way the defense cost does not eat up the limits for a pay. The other thing is that when the association has a D&O policy, they also need to make sure that all of the things like the monies and all of that stuff normally is held and done with the management company, right? And that goes into our next one with the monies here. Oh, here it is, fidelity bonds. So this covers board members for dishonesty. It covers things like computer fraud. It covers things like funds transfer fraud. And it's required now and it says there FHA approval. It's even gone beyond FHA. Well, from what we see, almost every bank now, when somebody goes to buy a condo, they contact our office and they say, we need a certificate of insurance for the association. We send them that, and then they have a formula. Now it says there 3 months of association dues plus reserves. That's kind of that's a simple way of explaining it. It's a formula that they have and the banks have. And the banks will sometimes go, oh, they have $100,000. Based off of their information, they need to have $103,000. As a board, you cannot really say no to that. You can't, we've had boards where they'll be like, we're not paying the extra to raise that. Or that person who's getting the mortgage, they need to pay for it. You can't do that because if you read your bylaws, it is the association's responsibility and the board's responsibility to carry the appropriate insurance for the association. Well, the fidelity bond is the appropriate insurance. And people can't get mortgages if you don't have the appropriate amount of coverage. If you deny that, you could have a horrible lawsuit because you don't have the right to do that. You have to carry the right insurance so somebody can get a mortgage or refinance or whatever. So the fidelity bonds are determined, like I said, by a formula, but that's kind of a simple one, you know, the 3 months. Now, just keep in mind, if you're saving for some sort of, you know, a roof project or whatever it may be, and you start to accumulate a lot of money, you're gonna have to, that fidelity bond is gonna, now, when you spend it all, you can lower the fidelity bond to whatever number is, you know, that the banks will accept. But just be aware of that, that when if you are starting to save for, you know, some associations have $1 million saved up because they're gonna do all these roofs. Well, they gotta carry a fidelity bond to cover that amount of money. And they really started doing this back when the housing crash in 08, 07, 08, because basically what was happening is associations were going insolvent, which is a problem for banks when they have mortgages that an association has and they can't afford to pay for their insurance and all these other things. So it caused a lot of issues, and that's why you have this fidelity bond now. And it does, again, it protects if some board member absconded, and then again, it has happened, with all that money, that could be a really big problem for the association. So
Is that what Travelers or Farm Bureau?
It's Travelers, yes,
Travelers.
yes, yep. So Travelers has a special, specific product. They write a D&O, a fidelity bond. I'm gonna go here, and a cyber policy, kind of all, they're separate policies, but they're kind of all one. They handle, they have, it's called Kevin Davis, and it's written through Travelers, and they specialize in D&O bonds and crime policies for, and cyber policies for associations. So people say, well, what's the difference between a cyber coverage and a crime coverage? So we kind of put these kind of next to each other to kind of give you an idea of what the difference is. This is like the simplest way I can kind of say it that makes a little sense. Crime is to protect your money. Cyber is to protect your information. So your information, it could, if you had a breach and you had something happen where they got a bunch of information off of someone's laptop or something like that, right? And it compromised people who live in the association in some way, or you had to send out letters, or you got to, ransom your information, things like that. That's what the cyber policy will cover. And that's why the limits are 50,000 to 100,000, and it kind of just goes through some of the things that they cover. And one thing too, in this crime policy that's covered, social engineering, that is becoming I have a client right now that is dealing with a horrible social engineering claim. And what it is, when I saw it the very first time I saw it, so is that like Facebook, something, but it's not.
Yeah.
What it is here's what these people are doing. They will, let's say you have KS management, your Lee's email is whatever, right? They change one, or they add one letter or one number onto Lee's email. They send it as they're acting as Lee to a board member and say, hey, we need to pay this, whatever it is, or they get your email as a board member and send it to Lee. And they send it over to Lee, acting as one of the board members. Hey, we need to pay this $25,000 whatever bill. Lee, okay. And he pays it. And then he goes, and then the contractor calls and said, hey, I got paid this is exactly what happened with my client. They did a job. Someone knew that somehow, created an email that looked exactly like theirs. Now this was couple $100,000. They sent the email to the company acting like my client, is saying, they're acting like him, saying, pay me for the services I did. They paid him. It wasn't him. Over $200,000, and you're not getting it back. It's gone, right? So social engineering is becoming very prevalent because all they got to do is, I see at this association, they're doing work here. This is the name of the company. I'm going to create an email, act like them. And that's what they do. So it's become extremely.
Sounds like a Facebook hack.
Yeah,
That's about what I had.
they do it through emails is how it's done.
I had a Facebook hack, and that's the exact sort of what people did. They took my profile and acted like me and was asking people for money.
Exactly. These are just some of the coverage highlights. You guys can, read these, and I don't need to go through each one of those with you, but it just gives you a little kind of explanation of what those coverages on a cyber policy, what they provide, different things there.
Hey, Merrick, real quick, can you jump back for a second and talk about the difference between, you mentioned Travelers as a standalone D&O policy and crime policy, the difference between that standalone and some insurers that maybe just try to rope D&O in regular all time?
Yeah, that's a good question. So that's why when you're getting insurance, you need to, ask those questions. I don't know why it's not going back for some reason, just so you know, it's not doing it up there, it's doing it down here. Is some carriers will have, like Farm Bureau, for example, we write the property and liability through, Farm Bureau insurance, but we don't write their D&O. Now they've redone their D&O and it's a lot better, but when we first started writing it, it was not good. It wasn't their fault. That's just how their coverage was set up, and that was not the best policy to write for the associations because it had limited coverage. A lot of times when you just get a D&O, like if you see a D&O policy and it costs you like $200, I would be really concerned, or $300 because it's probably got like a little bit of coverage, but I'm normally pretty confident that it's not going to have the depth of coverage that, like, the traveler's policy is going to cost you about $2,000. But trust me, it's well worth the money when you have a claim, because you got to remember, it's your responsibility as a board to insure the association correctly. Because if you have a claim and it's not covered under insurance, guess who's paying for it? The association. So you could have, $500,000 claim that now is not paid. You got to divide it between a bunch of people. That's going to be an issue, right? So just making sure that when you get a D&O policy, you ask those questions, like to what Lee's saying is this just because some carriers, you just like add it on. It's just but it's super inexpensive, but it doesn't have all the coverages that I would want if I was serving on a board. So just again, this is really so that you can make the right decisions as it relates to the insurance that you're getting. And again, not always price is important. I get it 100%, but coverage is also important, especially when it relates to something like an association, because all these other people are dependent on having the right policy.
Sometimes you get what you pay for,
Yes.
right? Yeah, so look
Yeah.
at that. If it's a super inexpensive product, maybe there's a reason.
Yeah.
Unless it's a non-auditor workers' comp.
Right. Yeah.
You have all the comments.
So any questions? Man, I know I do a really good job of explaining.
It's your first time.
But again, just some things, you guys as board members, I think, and work with the management company, just to let your co-owners know about what they should have in insurance. I think that's a really important thing that a lot of associations could do a better job of. Now, I get it. It's the responsibility of each individual. I get that. But for some reason in the condo world, nobody ever takes those bylaws into their, and like I said earlier, when we have claims, I never, when there's a claim, I don't go, oh, is the association insured correctly? It's, well, I sure hope, the co-owners that are having this, like, for example, you have a fire and you have to move out for 12 months. Do you have the right coverage for that? Most people don't, not in condos. Because the bad thing about condominium, how an HO6 policy is compared to a normal homeowner's policy. A normal homeowner's policy, I'm sure you maybe have had them throughout, you have the amount of coverage you have on the house, let's say it's $400,000. And then you automatically get a certain amount of personal property, a certain amount of loss of use, right? A certain amount of other structure coverage. On HO6 policies, you pick each one. So
Yeah, the house are required to do certain ones by the state.
Well, on a house, it's one way, but on a condo, it's not that way because they're so different. Some bylaws say I'm responsible for everything inside my unit. Some bylaws say we're going to build it back to the way that it was when it was originally constructed. You don't need a bunch of coverage except for betterments and improvements and things like that. So there's a lot of variables, and that's why the bylaws are so important for people to take to their insurance agent. And the bad thing is most people think, if you ask people that aren't in the business, go get a condo policy, they give you coverage for everything inside. Oh, you're responsible for everything inside of it. Well, that's actually not true. That's not true in 50% of the time. I mean, you know, the bylaws you guys have, there's a lot of condo associations where the association's policy will put it back to the way it was when it was with obviously new items, the way it was when it was originally constructed, minus any betterments and improvements. But then there's others that say you have to, like I said earlier, you have to, so that's what I mean by how you could have way too much coverage and you could have not nearly enough coverage. So doing that with your co-owners and educating them, and again, it could be having an agent come, it could be sending out something in your newsletter, or is it all digital nowadays? Nobody gets an actual newsletter, do they?
Some do,
Yeah.
some do.
Okay.
Some do.
Well, that makes it even easier, the digital part, right? Just add it to that so that people see it and it's just there all the time,
So I want to kind of pose this question to you guys. If a co-owner comes to you and says that they need their bylaws, if they're going to get insurance, what's the process of getting that to them? How do they have access those documents?
Well, we either provide, well, first off, we'll point it to KS because it's in the portal
Right.
and stuff.
Good answer.
Exactly. I just want to make sure that everybody here knows that as well. I just like to hear.
And we
directly from
have
you.
a lot of co-owners that are computer literate and so that, and we would just hand them that as well as all the resolutions and so on.
Yeah.
We just provide it. We have 82 units and
We've had our building documents updated
Mhm.
recently, and then we made sure each co-owner received a copy of their.
That's great.
Governing document.
Yeah, so we have, the text messaging system where they can access those documents directly through text as well. So if you do have somebody that's not as computer savvy and they do utilize their phones, which most of us are, pretty good with text messaging, we do have that, service where they can just text and get those documents immediately. So you could start to educate your co-owners and, owners that they can access those really easily in this way. So it takes a little bit of that work out of it for you. When they come on, send that to them directly. And that's another way that they can access it through the portal. You send it to them directly and then also through Stan, our text messaging system. Now, all of them are going to take them with them to get their insurance policies, right? It just made it so easy.
It's crazy how many people don't though. It's crazy. Like literally every meeting I go to and we do this, there'll be 50, 100 people. I'm not kidding. One person maybe will raise their hand. But it's unfortunate because it's really the insurance person should be asking for it, but they just.
well, myself, probably like a lot of other people, I, bundle my whole auto. And, they've never asked and stuff like that, they say, well, how much, you want to be insured for your interior things and, how much do I want to be reimbursed if it was a total loss?
Right.
And that was basically.
But you have to know what you're responsible for to come up with that number.
Yeah.
Well, everything on the inside, so I mean, basically.
But again, that's not always the case that you are responsible for everything inside your unit. Now, personal property you are, but not structurally.
It's good to look into those details because every association is different. And that's, something that's not just like everything within the walls. Yeah. That's not it. That's not the answer.
That is not the answer.
And a lot of the newer
Coworker told me,
governing documents, put the responsibility of like, say, drywall, paint and stuff like that on co-owners now, where it pulls it away from the association. So if the co-owner's HO6 policy doesn't say drywall or doesn't have coverage that covers drywall, then they're out of luck. They gotta pay for it.
You mentioned the FHA, on the portal, with KS, we filled out, and you guys filled out, a one-page insurance thing for lenders. Is that kind of what you were referring to? I mean.
No, FHA is, so it used to be kind of more of a common practice where associations as a whole were FHA approved or VA approved. And we're seeing that shift away from that in Michigan. where they're doing more spot approvals for a specific unit. So they're looking like if you buy a house, a freestanding house with a FHA loan, it has to meet certain requirements. There has to be certain upgrades to it. You have to have a certain amount in your bank account. Well, it's the same kind of thing for an association where they look at those, but they're doing it on an individual basis now rather than an association.
Well, there's something on the portal, it's a one-page thing, and we've directed inquiries, people, looking to buy
Yep.
to that. But is that what you're referring to, or?
No, what we're saying about FHA is you have to carry a certain amount of coverage on your crime policy for FHA to approve the loan. But
Not the
that's if it's
overall
already an
insurance.
FHA approved condominium. So, because some condominiums are not FHA approved, like if you have too high of a limit of rentals, for example, FHA won't approve. They won't loan money on that. I don't know what the number is off the top of my head, but, well, for example, insurance, Farm Bureau really won't, in a lot of carriers, if a condominium association gets over like 25% rentals, they won't insure it then anymore as a condo association. They'll insure it more as like an apartment. Well, just so you know, apartment rates are more than about double what a condo is in insurance. Just,
What are they doing on this new Airbnb world? Insurance companies,
Airbnb or what would,
short-term rentals.
oh, Airbnb, I'm sorry, I said Airbnb. Okay,
I tried it.
okay.
Same thing.
So it really depends on the carrier.
Have you seen any claims?
Oh, yeah.
Denied?
Denied because of it. I've not seen any claims denied because at least I haven't. It comes down to, like, for example, Farm Bureau, just because that's who the company I write almost all of the insurance through, they'll allow you to rent it out. I think it's 6 times a year, like 6 times, and they'll allow you to have a homeowner's policy and rent it out,
Okay.
6 times. Some carriers won't allow it at
Right.
all.
I agree.
Some carriers will allow, and if you're gonna do it a lot, then you just have to buy a different kind of, you can get it insured still. It just can't be like a homeowner's, like I live there kind of policy, So, but yeah, it is changing. I mean, they evolved, and insurance companies now have evolved where, and again, it just depends on the carrier and what they will allow, but you can get insurance still on it. Yeah, just gotta let them know that that's what you're doing with, and you'll pay more, obviously, than if it was just your home. You got a lot more risk going on.
Airbnb, or Airbnb.
Airbnbs, I mean, you got different people coming in,
Yeah,
so.
one of the people in my building is off on basic training, and while he was gone, his cousin rented out the unit as an Airbnb for him to help cover his costs.
Oh,
And we found out about it. So we put a
did you say?
box on it.
Yeah,
Really quick.
well, a lot of condos don't allow it,
Good for
right?
you.
So,
They're supposed to have at least 6 months.
is that what you, yeah.
Minimum. But I've got one question that's not about coverage for the condo association itself, but it's personal coverage.
Mhm.
Somebody said that there's a coverage that you get that covers if you have, like a hot water heater that breaks and damages your neighbor.
That's your liability insurance.
And they called it, there was a certain name for it, and it was very inexpensive.
Is it insurance coverage for like your furnace and your hot water heater and things like that, like a maintenance type of coverage?
No, it was something that would cover liability to your neighbors if you have a flood that damages their flooring where they have to replace it.
Well, that would fall under their insurance policy.
Well, and the liability for, I've had this claim myself.
Okay.
My condo, the toilet started leaking and it flooded the lady upstairs. My liability picked up the coverage on
On
that. Hers.
your liability
Yes.
coverage picked up. I'm surprised.
But there was
No.
another. there
Yeah,
was
normally the way it worked, like, let's say we're living in a, you
This was
start,
before it too.
oh, it's, okay. It was in, okay, it could be different there,
Could be.
because in Michigan,
Yeah.
you and I have a condo. You have a kitchen fire. Burns down your unit and my unit. Your insurance does not cover my unit. The insurance, that's everybody, it's like a car, right? If I get in a car accident with you and I damage your vehicle, doesn't matter if it was my fault or not, my insurance is not going to pay for your car. You have to carry insurance on your car. Similar to with the condo, now, they can try and come back and the insurance company could try to subrogate and all of that if they found that you were crazy negligent and did it, but for the most part, your insurance covers your stuff. Their insurance covers their stuff. Doesn't matter who started I could have a fire at a house and the wind blows and it catches my house on fire. Their insurance does not pay right? It doesn't work. So I'm not sure what that would be. Because that's why you carry insurance.
We have found that, over doing this for a very long time, that, it's nice to have some preventative things in place. And it's always when, something bad happens, then we learn our lesson. And then, from then on, we're like, oh, I know how to do this. And through our experiences, we've developed a maintenance program. Somebody come in and they will, check on all of the things, semi-annually and make sure that a lot of the things are in place that are going to be, could become issues. We also have a snowbird service as well. So if you're gone for an extended period of time and if you go down south for the winter, that will come in and have like a lockbox and make sure that everything, your sump pump is working and that, you're, before you leave, all of your, smoke detectors are up and running and we'll do a check-in with that. But a lot of times people don't think about doing those things. It's always after it happens. And then you think about, oh, I should have taken care of this and that. So we do have something through chaos management that can help with that. And it's a really great program that we built out for specific reasons like this.
Why are you here, not in Florida right now?
Yeah, so if you're a snowbird, let me know, right? I got you covered.
A little early, isn't it? When do you normally go?
It's a January.
I was gonna say, that's
Where
what
we're
a
at,
friend-
oh, nice.
Nice.
that's where a friend of mine goes. She usually goes in January too.
How long have you been going down there?
35 years.
Wow.
Must own
You had a
another
place
house
for
selling.
35 years? The place you
So I've had
had?
a couple.
Okay.
I was an insurance peddler like you, so I could take the time to go to.
Good deal.
I like
What
it.
kind of insurance? Yeah, I prefer not the word peddler. Professional would be better.
Professional.
What kind of insurance did you sell?
Heavy industrial. The cash in transit. Cars.
Oh, okay.
I was actually part of Comerica Bank.
Hmm.
They bought my agency.
Oh, that's big time money there, boy.
Oh, yeah, Comerica's a big bank.
Do we have anybody online that had any questions for Mayor Carroll? We're just trying to
So you just
touch base
focus
on
on
that.
that niche, son.
We're good.
Pardon?
That niche, that's what you focus on.
Looks like Joe has-
Transportation related and heavy construction.
No,
Joe, you
that's
have
pretty-
some questions?
Well,
Yeah, go ahead.
Yeah, let's do it.
in our bylaws, it talks about the workman's compensation insurance. And it says if the association is required to carry such insurance under the Michigan Worker Disability Compensation Act.
Disability?
Michigan Workers Disability.
Well, you are required, workers' comp.
Right, but it said if the association is required to carry it. I mean,
Correct.
are all condo associations required in the state of Michigan?
They're not
This is
required, I don't think, no, it's not like
It's not in the condo act that you're required.
yeah, it's not required. I would highly recommend it because you could have a claim
Right,
and you could have bought coverage for $575
yeah.
a year. How many units you got?
82.
Okay, if you do the math on that, divided by 82 units, it's about $6, $7 a unit
Oh, okay, right.
a year.
Mm-hmm,
Yeah, I mean, again, it's not required because you don't really have, yeah,
mm-hmm,
but I would, as a board,
right.
if I was advising you, I would.
So they refer to like the MCL 418.101.
Yeah, that's,
Have to look that up.
Yeah, I think that's like the work comp
Yeah, it's the labor.
Yeah.
labor
Oh,
type
okay.
thing, yeah.
Yeah, I don't want to talk about workman's comp.
There's recent legislation, I think it is federal with the Fannie Mae, Freddie Mac stuff. So in terms of requirements of insurance, so you guys meet all that.
Yes.
You're up about that.
Yes, absolutely. Yeah, so for example, you know, when I went through like that ordinance and law and stuff like that, those are the things that they ask for. They want to make sure that when they giving a mortgage, that they know if there's a loss, that that condo will be built back to way sufficient, right? So that they're not, they have a mortgage on something that's not gonna be able, now that's a problem, now it's not gonna be able to be rebuilt, but they've got a mortgage on it, you know? So yeah, when someone buys a unit, they request a certificate of insurance of the association. And if it wasn't up to their standard, they say, this doesn't meet it, you need to make this change or that change, whatever.
Yeah, when I was looking through that, they mentioned the words replacement cost and stuff. And I was looking at our insurance policy and I didn't see any such verbiage.
That says, well, replacement costs?
Yeah, like, you
No,
know,
it's
like
not.
our total costs and stuff, you know.
It
And,
didn't, what, on the policy?
yeah, you know,
Yeah, it's there.
well, we're not with you.
Yeah, oh, why not?
I asked for a quote.
I'm joking.
I asked, I was gonna hit you up after this, but,
Now, do you have a condo association or a homeowner association?
Condo.
Condo, okay. Because there is difference with that. There's homeowner associations are a little different, you know, than condos, because you don't need to worry about insuring the buildings. I do have one homeowner association though that has individual homes and the association actually pays for all the insurance for them. It's crazy.
We have that AIAI.
Yeah.
associations, insurance agency.
Oh, yeah. I'm familiar with them. It's a good policy.
Marris is better.
No, I didn't say that. Yeah. It is a good though. I know that policy. They've got good coverage and everything.
Do you have any suggestions at all? So we do educational seminars quarterly, and really we like to base our planning for next year, since we're coming into the end of the year, off of some of the needs that you have. If you want to mull it over for a little while and think about it, if there's something that you specifically would like to learn more about, like, you know, this insurance seminar, let me know, or let Lee know. You know, we'd love to get your feedback on things that you know that come up over and over and over again. And we'd like to have you back and, you know, discuss some of those things. What do you got? Anything come to mind? No, I know. It's hard. And like when it happens that we think about stuff, right?
One of the ideas that I was kind of tossing around, and I'll see if you guys would find it interesting or not, is doing separate classes catering to the positions. So we have one that's how to be a president, one that's how to be a treasurer. Would that be beneficial to you guys?
That's a good idea.
Yeah.
We only have 3 people on our board. We can't even get a quorum. Lasted meetings.
Sorry, I don't mean to laugh.
Because normally the board members are just, you know, I tell the new board member, well, we do this, and this, and then, you know, it's just word of mouth, and then it's like, I don't know if we're doing it right, doing it wrong.
Right. It'd be nice to educate others about what it's like to be a president or a vice president if they were interested, rather than just like this small amount of what they know from, you know, the association itself.
Right.
So, that was one of the ideas that we had.
Because it's in our bylaws, it explains the president.
Yeah.
It's all legalese.
To know,
Yeah.
we've been kind of more, since we're so few, we've been kind of free flowing in our
Yeah.
thing, and only 2 of our board members are local. 3rd member is working out of state, so she's attends our monthly meetings remotely.
Well, that's nice.
102 units.
Are you board president? or-
Yeah, keeper.
Treasure.
Right.
I met
It's
her
only
in
20
May, and just moved in, so I talked to her.
Well, you've got our.
You're like, "Hey."
Welcome to the neighborhood. You're on the neighborhood.
That's your
You can
initiation.
send her to our seminar.
What I was thinking was if we could have more than one person go to like, who wants to be a president or
Oh, yeah, of course. We
or
would,
whatever.
we wouldn't
Is that-
restrict it just to like, you have to be the current president, but a class more someone, okay, here's what a president's job is, here's what a
Yeah,
treasurer
so I inherited the presidency when I joined.
Congratulations.
Money would have been better.
You will never not be president now.
So I'm gonna be, sharing some stuff on social media tomorrow. You can get Merrick's, information directly from him if you have questions or something comes up later.
Yeah, we'll share.
Yeah, we'll share that
Yeah.
slideshow with you as well.
They have it, so they can send it to you.
Yeah. And then, underneath your little notes there, we have this is actually something that we're going to be using at all of our annual meetings moving forward and just in general at meetings. And all of the information in here, there's a couple of things that we had discussed, like, as an example, the Facebook giveaway, there's a QR code on the, Expo page that you can scan and that will take you to that. The tech service, there's a QR code for that. So we'll be coming, when we do annuals, we'll be coming and bringing this and give it to everyone. So they'll have those resources, easily at their fingertips. Same thing with that snowbird service and the maintenance program. If you have any other questions about that, there's a little bit more information here for you to review. And you can reach out to us again, if you have any questions or if you have, ways to kind of cater it or have ideas. We're all, we have an open door here, so we like to get your feedback.
Do we get an extra entry coming tonight?
You do, you do, don't you?
I just wanted to make sure because when I was trying to go through and.
Yeah, I have you checked in and I'll make sure that you do get that. So it's the $200 gift card that will be announced December 15th, and I do have you logged for that. If you haven't signed up for the giveaway, I have you checked in today and I'll put you in as an entry. We do have your phone number to contact you. Okay, yes, right. And speaking of, I just wanted to give a special thank you to Joe here for being so wonderful for us. He's supports us in all of our endeavors, comes to our educational seminars, and really is supportive online. So we wanted to, give this to you. So good to us. and
Well, guys,
we do appreciate
I gotta get out of here.
Thank you, Merrick. I appreciate everything.
Oh, thank you.
You're so welcome. No, really, thank you. I mean, it means a lot to us that you are so involved, and especially me. You're one that's behind the scenes all the time. Joe's here.
I was on vacation when Natalie posted this event, putting it on Facebook and everything, and she's like, the first person registered. I'm like, it was Joe.
You can have a couple of cookies if you like, or anything, on your way out, just let us know. Thank you so much for coming. I appreciate you being a part of that.
Oh, thank you.
That was, interesting to learn about that. Condo, even though I already knew half that.
Just a replay, yes.
No, it's,
Here, I'll write it down, and then just give me.
Marijuana.